This is how I lost $1,000 day trading Nasdaq today and ES. I took 3 trades total. The first one was break even. I got stopped out of break even, and then the next 2 I got stopped out. So let's go ahead and do just a quick trade recap and go over everything I did right, everything I did wrong, and hopefully we can learn a couple lessons here. So today is Thursday, February 19th, 2026. And I took these trades like 20 minutes ago, so it's fairly recent. Let's do a quick little bar replay, and I'll just do a top down analysis with you guys and kind of tell you why I chose to take these trades. So going into market open, this is what we were looking like. Let's start on the high time frame here. So I have a lot of things marked out. I'm mainly just going to look at Nasdaq. ES is on this side, as you can see. But Nasdaq, we have been hanging out in this giant 4-hour gap overnight in London and Asian session, and we were using it to go down. So I was bearish on the day, and I had this low and this 4-hour low as targets for my take profit. And then once market opened, what happened was we ended up taking out this first low that I just marked out, but on ES, thus putting in an SMT divergence. So about right here, you can see it got really low on Nasdaq, but we never took out that low. But at the same time, we did take it out right here on ES. Let me go ahead and show you a little bit better. There we go. So we took out that low right here, just like that. I know that's not straight, but you get the idea. And so because of that, I was like, okay, that doesn't mean I'm bullish just because I see an SMT, but there were a couple 1-hour gaps above us, and we even formed a small 4-hour gap in the process. Once we hit that 8 o'clock, for me it's 8 o'clock, I'm in Mountain Standard Time, but once we hit that 8 o'clock 4-hour candle closure, we made a small little 4-hour gap right up here. So let's go ahead and fast forward just a little bit. And right about here is where I actually took my first trade. I'll go ahead and show you what that looks like. So my first trade was actually a long, and this kind of came out of nowhere, but I took it on this candle closure. So the reason I took this trade was because yes, we just swept all these highs, and yes, we just tapped into this 1-hour gap, and yes, we left this low, so we want to take shorts, right? But what I saw in a different way was this fair value gap right here, this little one here. Let me try and there we go. It's small, but this little bearish one got invalidated, and we kept pushing up. And there was a 4-hour gap above us, right? The gap kind of looked something like this, the 4-hour gap. It was small, but it looked something like that. I'll go ahead and just mark it out so it can make a little bit more sense here. There's that, and there's that. Okay, so there's the 4-hour gap. So I didn't want to take a short knowing that we just created a 4-hour gap above us. I would rather tap into that first. And so what I did was I waited for this candle closure right here above this gap to show us that we're going to keep going up. And so I took a long off of that, and I actually was targeting all of these equal highs. There's a bunch of these on the 1 minute, and this looked really nice for a take profit. And above it was another 1-hour unmitigated gap, which means it has never been touched. Price hasn't gotten back into that gap to rebalance price action. So my trade idea was going to look like this. We were going to target that right there, which is a nice 1 to 2. We're also hitting into this 4-hour gap right here. We're also hitting into this 1-hour gap, taking out all these highs. I felt good about that. That kind of came out of nowhere. I was actually looking at shorts right here, but then I realized like I don't want to take a short knowing that I just left the 4-hour gap right above us. I'd rather price taps into that. And worst case scenario, once we got most of the way up and we hit this big candle up, I moved to break even. I moved stops to break even. And sadly, we never got up to those equal highs, and I got stopped out. But I wasn't really worried about it because my overall bias is a short. And a few minutes later, I ended up taking a short. It was actually right here on this candle. And the reason I took this trade was because once we tapped into this 4 hour gap, we started showing a little bit of pressure to the downside, right? On ES, we were actually delivering a little bit lower, and we broke past this low right here for a nice CISD, which is a change in the state of demand. So we broke structure to the downside, and I liked that on ES. But I like to trade Nasdaq just because I don't know, I'm just used to it. And so I decided to take this trade on Nasdaq about the same time that we broke structure on this candle right here. So on ES, if I were to have taken that trade, it would have looked like this, targeting all these lows that I told you about. It would have looked something like that. But at the same time, I took it on Nasdaq. So this was my second trade. And stops were pretty high for this. I didn't want to have like a 60-point stop loss. So I think I put my stop to about right here somewhere. It was about a 35 point stop. And I was going to move to break even here at this low. And then I was trying to target, I know it's a pretty big trade, but I was trying to target these lows, if not the lows that we never took out this morning that ES did take out. So I understand that's a big trade. Normally on a funded account, I wouldn't take big trades like this, but I'm trying to pass an eval right now, so I'm being a little bit more aggressive. And again, being aggressive with evals doesn't mean take a bunch of trades. It just means risk a little bit more money and try and pass them within a couple trades. So that was my trade idea. And what happened was at the same time on the 3 minute time frame or excuse me, the 2 minute time frame on ES, this formed a little fair value gap right here. I have it marked out. It's not perfect, but this little fair value gap. And I told myself if price comes back into here and retests, that's also it looks like a really good breaker model, right? We've got the order block going up here, the last manipulation leg. We've got a little breaker block right here. I know this is kind of all overlapping, but it's nice when it overlaps because those are just added confluences to tell you where price wants to go. And then these two little lines, this was my little fair value gap. I told myself if price comes back into there, that is reasonably the best trade setup in my eyes, in my opinion, for today. And if I were to have taken that trade, I don't want to put my stop all the way up here because that's too high. So I put it above this breaker block. And what happened was we never ended up hitting break even on this trade. This was my second trade on Nasdaq. We got close, but we never did. And we ended up going up. And right here on this candle, we actually entered the trade. So I was technically in the same trade, but on ES and Nasdaq. And this is something that I've done in the past. I don't know the right terminology for it, but I like to call it doubling down because I'm essentially just doubling my position. Um, and I have won trades doing that, but it's not the best thing to do in the world. So that's definitely something that I should have done better. Because once we came back up into this fair value gap on ES and retested into this zone, I executed and I took a short and I put my stops right here. However, at the same time, I got stopped out on NASDAQ right here on the next candle. And then you can see the next candle right after that, we pushed way down. And I also did something kind of dumb here. And once I saw that, I was like, here's my reasoning. On NASDAQ, we invalidated this gap. And to me, that looked really nice. I was like, okay, a little retest up here into this zone, right? And we invalidated that. That looks great. So at that same time, I actually put another contract in on ES because this I think was more of a revenge trade idea. I was already in the same trade, but this is where I actually doubled down on a position and I put one more contract. So I traded two minis on ES and I literally told myself like, well, I can't afford to lose this much drawdown. So I moved my stops here. And with this loss, I was already down like $600 or something like that on NASDAQ. And this account specifically, I'm on an Alpha Futures eval. I think it's the zero plan, and they have a daily drawdown limit of $1,000. So if you go past $1,000, they'll lock your account for 24 hours and you can't trade it. So that's what happened to me because I was already down $600 on this Nasdaq loss, and I decided at the same time to enter twice on ES, and I didn't even give myself enough space or position size to have my stops go all the way up here. I actually got stopped out like right here. A couple candles later, we went up about right there, and I got stopped out because my account got liquidated. I hit that $1,000 daily drawdown limit, and I got stopped out, and I can't trade for another 24 hours, which is, I get that. Well, it's not 24 hours, it's until the day closes. So it's today when the market closes, and then it'll reopen in the evening for the Asian session. But you get the idea. So today, a couple things that I did wrong. I think I like to look at trading in three different ways. You've got your strategy, right? Your conviction. Why are you actually taking a trade? You've got risk management. Make sure you're risking proper size. Don't like double down. Don't risk twice as much if you lose. And then you have psychology. Just waiting, be disciplined, wait for a good setup, be patient, wait, and just don't try and trade so much. I feel like personally my strategy today was pretty good. I had the right idea, and I feel like my psychology was okay um, for half of it. But I do believe that I kind of revenge traded today, and especially doubling down on a position that I mean, I felt good about it. I do, but mainly the big problem today was my risk management. I just risked too much money. I got liquidated, and I can't trade the PM session now. Like if there's a nice setup in the PM session, I can't trade it, which sucks. But this is what happens when you decide to just put a little bit of too much money on the line. And like, yes, I'm trading evals, so I'm being a little bit more aggressive, but I need to remember that doesn't mean take all these trades and put more money into it. That just means still only take A plus setups and just put a little bit more money on those A plus setups, and that's it. But like, if this were a funded on this first trade setup, I probably wouldn't have moved to break even here. I probably would have just taken profits right there. I know for a fact that when I get to the funded stage, I'm going to trade a lot differently and a lot more conservatively, if you want to put it that way, and just go for smaller trade wins. This one still wouldn't have hit, but it's only a 1 to 1.46, 1 to 1.5 RR, and I would just be going for smaller trade ideas, right? So maybe I should start doing that. This is one of those days where I just got a little bit greedy, and I have to pay the price because now I gotta wait until tomorrow, which is totally fine. I would rather do that because I'm not technically in the right mindset to be taking all these trades. And also, like if we fast forward to where the market is now, let's see, I haven't even looked. We are literally just consolidating. So this is where market is live. I took these trades not too long ago, and I like to just draw a box around price sometimes. Like we're just consolidating. We're not doing anything. I thought the idea is we come up into this 4 hour gap, right? That I have marked out. It was also the discount, if you know what premium and discount is of the range. It was in the discount. So, like I said, my strategy I feel like was pretty good. I think my risk management was what I didn't do well today, and I just risked a little bit too much on these trades. So I should have been aware of that. If I'm willing to take 2 or maybe even 3 trades a day, I shouldn't be risking 6 or 7 or $800 per trade, because if I lose them, right, Alpha Futures only lets me lose up to $1,000 a day. So I should be doing like 4 or maybe $500 per trade. So it's a good learning lesson. I need to just basically risk a little bit less. If it's a nice A plus setup, just make sure I only really take that one and maybe risk a little bit more on that one. But hopefully you guys learned something from this trade recap. I definitely did. Just be cautious of your emotions and try not to let the market get to you. Try not to, just let greed get to you. And if you lose, just accept it and try and learn everything you possibly can from that loss. So, anyways, there's the quick recap for today. 1 break even trade and 2 losses. And tomorrow's Friday, so we got one more trading day. I believe there's a red news folder tomorrow, so there should be some volatility in the market, which will be nice. So now we're dumping, which is lovely to see. I love seeing stuff like that when you lose. It's actually a good learning lesson. It's like when, I don't know, I'm trying to think of like a metaphor, but it's good when you make a mistake and then it still works out like your idea was there. So it's like it teaches you good lessons, you know? It's like, oh, go sit in timeout while your friends are still having fun, you know what I mean? But you had the right idea. So, anyways, I don't know if that made sense. It makes sense in my mind. But we'll see you guys in the next one. Hopefully, this trade recap helped you guys. It's definitely helping me. Like I've mentioned in my other videos, this channel is just all about journaling my trades, back testing, and just trying to learn from our mistakes. So, we will see you guys in the next one.